Hey, what's up, y'all? Subscribe to my channel, hit the like button, watch my recent videos, share my channel also. Alright, man, gonna give y'all some stock plays to buy. Most of these are dividend growth stocks, probably yielding a dividend of 6% or higher. Well, I got Clorox on here. That just came in the buy range too. That's probably like a 3.5%, 4% yield. But these dividend growth stocks, man, you can get a little bit of price appreciation with them when they do get bullish, and you're also gonna get that nice quarterly paying dividend. So let's get to it, man. We're gonna start off with Wendy's. Trading right now at $11.76. Wendy's, McDonald's, Starbucks, all fast food are getting their butt whooped. Um, tariffs and everything going on. Market is bad in general. That's why I'm kind of getting out of the food stocks. But Wendy's at 11.76. 52-week low is 11.70. Made a new 52-week low today, man. 52-week high $20.60. P ratio 12.51. This might come down some more, but we're gonna see. Average trade value 5.77 million. This does trade quick. This was actually one of my favorite stocks. I used to trade this stock daily. I used to buy it in value, make about 20 to 50 cents a share, and keep it dang moving when it was, well, at that time, that's how it was trading. But market cap 2.26 billion, dividend yield 4.76%. Pays like 24 cents a share or something like that. I want to say. I know they might have cut their dividend. This dividend should have been higher. Now it's paying 56 cents a year. So we're gonna see what happens. I got to go look at the dividend payout history on it. But Wendy's, yes, in buy range. Like I said, I need to go do that dividend payout history on it, because this usually paid like 24 cents a share a month or something. It's my first time seeing that falls on that dividend yield being this low. Because it's usually around a 6% yield, but being that it's lower, the lower the price, the higher the dividend yield. So this should have been trading between 7 and 9%, I want to say. But anyway, man, we're going to go to the next one. We're going to go ticker WU, another swing trade I like to do. Western Union, right at $9.54. 52-week low is $9, 52-week high $13.49. 9.85% dividend yield. See, Wendy's should be around the same price of yield and being at the prices that Western Union pays like 26 cents a share quarterly. Market cap 3.15 billion. I know the financial sector is getting beat up too. Average trade volume 6.79 million. PE ratio is at a 3.55, so this is truly undervalued. This is an undervalued play here, man. You want to swing trade, this would be one to go. Might have to hold it for a while for it to go to its 52-week high, but you're going to get that juicy dividend every quarter. So Western Union is another one to go. I'm going to go ticker FLO. A lot of these stocks you might have already seen in the last couple of weeks or whatever, but like I said, you got to trade the market you in. They in buy range. You need to be accumulating. All right, Flowers Food, ticker FLO, $17.38. 52-week low 17.17 with a high 26.12. This gonna go back above the $20 mark. Good price to start a position in, a lower your average cost. Dividend yield 5.52%, and they do dividend hikes. 2.13 million average trade value. Market cap 3.67 billion. It's another one for you to get, man. Got to take advantage of this dip. Gonna go with KHC, Kraft Heinz. People consider this a buy and hold stock. One point in time in Warren Buffett portfolio, this was the highest dividend stock he had after he sold Pfizer. $28.23. 52-week low 27.25 with a high $36.70. Dividend yield 5.67%. Pay 40 cents a share, a quarter dividend. So you see it's $1.60 for the year. P ratio 12.89. Average trade volume is 11.26 million. So this also moves kind of fast, but right now it's trading in a sideways pattern. Seems like it can't get over the $31 range. But Right now, everything bad and crazy, man. So just gonna see what it do. UPS gonna be next. Read an article today. They said if they cut their dividend, then they would start to outperform the market. So they might have a dividend cut coming. I think they were saying the dividend yield is unsustainable now. But if they end up cutting the dividend, their earnings and revenue will look way better. They operating a little leaner, being that they shutting down, we're laying off 20,000 customers, not customers, but employees, and closing down 73 facilities. So they're gonna operate a little leaner. Earnings should get better. Not that they're making more money, they're just saving money. So market cap 79.63 billion, 6.98% yield. Average trade value 6.22 million, P ratio 13.72. 52-week low, $90.55 with a high $150.42. So I'm guessing when they cut this dividend about a 5 per percent, it's at 7% now, 6.98. That's 2% they'll save going out. So I guess that will make things look a little better on paper though. But we're gonna see what is gonna happen. PFE Pfizer. Trading at 22.79. Also got a nice dividend yield. Dividend 7.55%. This is a nice dividend play. 52-week low, $20.92 with a high of $31.54. Market cap 129.57 billion. P ratio 16.51. He also been trading sideways since this tariff stuff. They went down. Well, they went down to 2092, but trade around that $22, $23 mark. When everything was good, it always traded between the 26 and 28. Couldn't never get past like the $30, $31. But it's another one to get if you're looking for a dependable dividend from a blue chip stock. And I'm gonna go with CLX. Just seeing that this starting to come down. Clorox. They make the bleach and everything, got other stuff too. Trade right now at $36.48. 52-week low, $127.60 with a high of $171.37. This is definitely a buy and hold stock for the dividend. Dividend yield 3.58%. Pays $1.22 a share out quarterly. Market cap 16.82 billion. Average trade value 1.53 million. P ratio 24.50. So let's see what the analysts are saying on Clorox anyway. They're probably saying a hold. That's what I was gonna say. But yeah, man. Those are some plays for you to go, in case you like some dividend stocks, dividend plays. Not in a double-digit yielders. Taking a little less risk on them, depending on their cash flow and what free cash flow they got. But that's it, man. Signing off. Go get your money.